Well, good morning. I'm Jaginder Rana. Topic for the discussion today is health insurance for senior citizens. Health insurance for senior citizens. Recently, the Insurance Regulatory and Development Authority of India directed insurers not to revise the premium for senior citizens by more than 10% per annum. If an insurer proposes to increase the premium for senior citizens by more than this level, it must obtain prior approval from IRDAI. So, three factors led to an increase in health insurance premiums. One is medical inflation, which in India is around 14 to 15%. Second is the insurer's claim experience. And the third is change in age bracket. So once a customer moves from 60 to 65 age bracket or from 65 to 70 age bracket, there's often a substantial jump in premium. So health insurance premiums do not necessarily increase every year. A company might keep the premium constant for 3 years, after which it might bump it up substantially. The customers who entered that plan a year ago would feel that their premium has undergone a hefty increase within a short period. Health insurance for senior citizens, you will see that premiums are for a 60-year-old male living in Delhi for a 20 lakh sum insured. Aditya Birla Health Insurance Active 1 plan. No room rent limit for rupees 75 lakh renewal bonus. Optional unlimited restoration of cover and annual premium is rupees 55. Care annual premium is rupees 55. Care insurance, Care Advantage is the name of plan. Annual premium is only 41 rupees. 60-year-old male living in Delhi for 20 lakhs sum insured. So, ICICI Lombard have Elevate plan 49 lakh rupees. Neva Bupa has Reassure Bronze Plus. This has 37 rupees. Star has Star Super. This has 42 rupees. That means senior citizens have a higher propensity to fall ill because of their advanced age. As a result, insurers tend to increase their premiums by a higher amount. In any case, premiums of senior citizens are already high, and whenever there is a sharp increase, it leads to a lot of complaints. Hence, the regulator has taken cognizance of this issue. So, the fact that most senior citizens do not have an active income and are dependent on their savings may also have prompted the regulator to impose this cap. The imposition of a cap is expected to have a positive impact. It will provide comfort to senior citizens that their premiums will go up within a certain limit. More senior citizens or their children on their behalf will be incentivized to purchase health insurance. So budgeting for this expense will also become easier. Insurers are now expected to be more sensitive to the fact that the regulator is keeping an eye on pricing for senior citizens. They will now give a lot of thought to how they price their new products and how they hike the premiums over the years. So the mindset of locking in customers at a low price and then jacking up the price later is expected to die out. Experts see two possible negative effects of the cap on pricing. The initial price might be set higher. Insurers will want to make sure that they get the pricing right in the first round at the time of launch. So they will, however, have to be mindful of competitive pressure. If you set the premiums too high, fewer customers will come into your pool. So some tightening of underwriting standards may also occur. Insurers could get stricter regarding whom they issue the policy to. So once a policy has been launched, the coverage it offers cannot be reduced. But there might be fewer augmentations to its features. Earlier, whenever there was a price increase, insurers used to add some features to the plan. We might see limited instances of that in the future since insurance companies may not be able to afford such improvements. So one option for reducing the premium is to go for a deductible of rupees 3 to 5 lakh. Whatever amount you choose as deductibles, keep that much aside for medical conditions. So when the need for hospitalization arises, go to a preferred partner network hospital. Going to such a hospital can get you a discount of up to 15%. If you go for a lower category of room, say twin or multi-sharing, that can also get you a discount. So nowadays plans have become modular. That means you can avoid all those features which you are not likely to need. The customers who find it difficult to pay a large amount annually should go for monthly payments which are more bearable. So instead of waiting till the age of 60 or later, buy health insurance at an early age. This will allow you to get a good plan at a reasonable price. So as you age, the number of choices available to you also reduces. You may already have a few elements due to which the range of policies you can choose from becomes limited. He also suggests going for a no-frills plan that tends to be more cost-effective. So underwriting norms for senior citizens tend to be strict and could get even stricter in coming days. Look for specialized senior citizen plans which tend to have more accommodating underwriting standards. So that insurance companies may evaluate risk more favorably if you provide a thorough account of your medical history and are open about existing health issues. When an insurer turns down your application, they typically provide the reason for doing so. Try another insurer, go through a pre-underwriting process where you provide your medical reports and get a view from them about whether they are likely to accept your proposal. Another option is to go for an ailment-specific product, say heart-related, which tends to accept customers with pre-existing ailments. The help of a good broker who may be able to guide you regarding which insurer is likely to accept your case. And managing health gets more challenging as we get older, particularly for seniors. According to a recent UN Population Fund 2023 estimates, almost 26% of Indian senior people suffer from several chronic ailments, including cardiovascular disease, diabetes, and hypertension. So given such common health risks, appropriate healthcare coverage is imperative, and pre-existing disease coverage in an insurance plan is a major determinant of the healthy security of a senior citizen. So pre-existing diseases are health conditions that a person already has before getting a new health insurance policy. So from high blood pressure and diabetes to more severe illnesses like heart disease, kidney difficulties and even cancer, these diseases can strike anyone. The best medical insurance for senior citizen policy provides coverage for pre-existing conditions, illnesses or disorders the policyholder already has at the time of purchasing the policy. Although most insurance companies have a waiting time before such problem can be covered. So PED coverage, that is pre-existing disease coverage, lets senior gets financial protection for these diseases once the required waiting term has elapsed. So the need for pre-existing sickness coverage is much more urgent for senior citizens. Many health problems often strikes at this point in life concurrently. Paying for treatment out of pocket might become unbearable without proper insurance coverage. Senior citizens should consider including pre-existing sicknesses coverage in the best family health insurance plan for the following reasons. So, protection against chronic health condition is required. Many senior adults have chronic conditions such as asthma, diabetes, or hypertension. These disorders could call for long-term treatment, including frequent prescriptions. A doctor's visit or perhaps hospitalization, continuous therapy for some diseases can rapidly become expensive without insurance coverage. Coverage for pre-existing diseases guarantees financial protection for senior individuals against the high expenses of treating chronic conditions. Health insurance policies with pre-existing diseases coverage have one of the main benefits. They present a more complete approach to health. Most insurance with disability lets seniors get coverage for regular treatment and emergencies. This would enable elderly people to concentrate on enjoying their lives free from continual concern about the cost of health management. Then peace of mind is most important because health becomes a common concern with age. The problem gets much worse when one combines financial uncertainty with the concern of not being able to get reasonably priced medical coverage. So insurance covering pre-existing illnesses provides peace of mind by ensuring support for ongoing health issues. Then timely treatment for emerging issues. Seniors with well-managed pre-existing conditions can still face new health issues over time. So insurance that covers these conditions ensures they are protected against new problems and complications. This protection is vital as seniors are more vulnerable to health changes. And better financial planning is required because managing health care expenses can be difficult for seniors with fixed income or retirement money. If unanticipated treatments are needed, high medical costs can wipe your savings. With pre-existing disease coverage, seniors can relax knowing their insurance company would handle treatment expenses for these conditions. So seniors with this financial stability can better budget their money and prevent draining their savings. Many senior citizens need treatment from highly qualified doctors and medical professionals. Since seniors can occasionally call for specialist care for health problems, usually speaking, these experts charge more than regular practitioners. However, most senior citizens' insurance plans with pre-existing disease coverage guarantee access to networked healthcare facility and a specialist, ensuring that elderly persons get top quality treatment free from financial stress. So including pre-existing disease coverage in a senior citizen insurance plan is crucial since health issues tend to rise with age. So for continuous medical conditions, such financial protection guarantees seniors' ability to maintain their health and well-being without needless financial burdens. One should carefully evaluate the degree of pre-existing diseases or disease coverage provided and the terms connected with choosing the best family health insurance plan. After all, the stronger the coverage, the more seniors feel safe without handling their health and their golden years. So health insurers are seeking clarity from the IRDA on the implementation of its recent circular capping annual premium hikes for senior citizens and 10%, particularly how it applies to long-term policies and whether rates can be adjusted upon renewal. So in a circular issued on January 30, 2025, the insurance regulator restricted all general and health insurers offering indemnity-based health insurance from increasing premiums for individuals aged 60 and above by more than 10% in a single year. following complaints from policyholders. So some of whom saw their premiums double within a year. Some insurers have assumed the cap applies to the last premium paid before the hike. However, insurers are uncertain whether they can impose a cumulative increase upon renewal after a multi-year policy term ends. So they are going to seek the regulator to clarify whether for a senior citizen with a 3-year policy, insurers can increase premium by more than 10% when the policy renews in the 4th year, or if the cap will continue to apply year by year. So IRDAI has cited financial vulnerability as a key reason for this restriction. The most vulnerable age group is senior citizen with limited sources of income. So they are the most impacted by steep increase in health insurance premiums. This has been a regulatory concern for IRDAI. So other than the cap, the regulator has urged insurers to standardize pricing agreements with hospitals, but has also cracked down on insurers repackaging existing products with minor tweaks to justify price increases. So along with the price hike cap, the new regulatory restrictions on product discontinuation without regulatory approval will benefit the policyholders, particularly senior citizens. Insurers have long relied on withdrawing older policies and replacing them with slightly modified, higher priced version. So with IRDAI mandating approval for withdrawals, that loophole is expected to close. Following the cap on premium hike, insurers will have to rethink their pricing strategies to account for additional cost, such as immunotherapy, which has become a regulatory requirement despite being a preventive treatment rather than a critical necessity like surgery or chemotherapy. So this is akin to sudden mandate for helmet coverage in motor insurance, which would require insurers to rework the pricing. Thank you very much.